course, because of that listing, has entered the battle against PayTM. We join now to talk about what the key factors for both of these players are. And Harsh, interesting times.
Very interesting times, Neeraj. It's a play, of course, on the fintech in India and how that's playing out. You have PayTM, a well-established player, well-established listed entity now, versus a new incumbent, MobiKwik, at least in both, actually in both in markets as well as in terms of size. And let's compare those two. In terms of monthly active users, 1.6 crore is what MobiKwik has. 9 to 10 crore monthly active users is FY24 data, right? So 9 to 10 crore monthly active users is what PayTM has in FY24. It's a 6x just in terms of that. Gross merchandise value as well, around 4 times is what PayTM clocks versus a MobiKwik. And the merchant base, this is key because this allows the entities to distribute product, both the sound boxes, card machines and the like, but also other financial services like loans to your merchants and MSMEs. And that's why this is super relevant. Nearly 9x PayTM in terms of the merchant base that it has. Now let's talk about numbers, right? Your revenue currently for MobiKwik stands at 875 crore, and I'm talking by currently, I mean FY24. It's growing at a very fast clip. In fact, it did 350 plus crore in Q1 FY25. So likely if I annualize that, that number will be well north of 1,000 crore already in FY25. You're looking at PayTM in comparison, 10,000 crore in FY24. All that's happening on the regulatory front likely to drag that number at least for a year or two around the 10,000 crore kind of mark. So expect that number not to go up in a significant fashion at least for another year. PayTM to MobiKwik is 11x, but that will shrink fast because that 875 crore will go up and likely the 10,000 crore won't. And that's why that number will likely come down quite sharply. EBITDA margin, 4%. Mind you, it's EBITDA margin, not contribution margin, not contribution profit, not adjusted EBITDA before ESOP, etc. This is pure play EBITDA margin, 4% versus -9. PayTM has actually reversed that. You're expecting a -15% odd of EBITDA margin in the current financial year, FY25, because of all the regulatory sanctions. But that will also reverse quickly in FY26. That's the expectation. Market cap, 3,900 crore currently, MobiKwik approximately, versus the 65,000 crore market cap that PayTM has. It's 16 times. So 11 times sales shrinking and 16 times market cap. That's where the attractiveness of a MobiKwik comes into play, at least in the price. That's where the attractiveness is. Price to sales 2.5 times versus 6.5 times, and that's where you're seeing it. This is IPO price currently 4.5 versus 6.5. This number will likely go down because your sales number is going to shoot up, and therefore your price to sales will likely come down. Therefore, it will continue to trade at a discount because PayTM's top line will not go up by much, as I did mention. Price to earnings only applicable to MobiKwik at 280 times now. But that number, we'll have to try and see as to how quickly that adjusts to normalization. Back to you, Neeraj.
Well, interesting times, and let's get in. Devin Choksi, Director of DR Choksi Investment Manager, is also joining in. Devin, any thoughts here on PayTM versus MobiKwik?
Hi, Neeraj. Good afternoon. Well, I think very interesting study. I was just watching what exactly you guys have compared with. And whatever little experience I think that we have right from both these companies' interaction, I feel that on one side, both of them are dependent on certain amount of key factors of adding the more number of customers through more number of merchants, etc. However, I think we keep struggling by asking them this particular question, that where is the margin? And to that extent, I think the margins are not being announced. Suppose MobiKwik is at this point of time having a good amount of headroom to score, particularly because the numbers are comparatively less to the PayTM in many areas. But suppose if they have to acquire more number of merchants, suppose if they have to acquire more number of customers, again the same question comes in. where is the margin? How are you going to, I think, spend money? Though you may have collected now, but I think how are you going to spend money to acquire and produce the margin? Including the distribution products that they are talking about in the wealth management or in the bank product side. Again, I think the same question arises. I think whether I think through this distribution you're going to create significant amount of margin pool that you are talking about. So I guess I think we will interestingly watch this particular journey for these companies, MobiKwik in particular. Their execution skills definitely I think will require to be seen how exactly they're executing it. But in my viewpoint, I think everything seems to be in price. Maybe I think one can argue that MobiKwik deserves to, I think, go into higher numbers. I think as far as the price is concerned, this market is paying that kind of a premium. But as far as I think the PayTM is concerned, maybe I think things are in price at this point of time. So not completely sure whether I would like to put my money behind this particular companies at this point of time.
Okay. Well, we've certainly taken Kush's view on PayTM. Shivangi, before we thank you, quick view on PayTM if you have one.
So, talking about the digital age fintech stocks, I think, it looks quite positive. And we've seen on the year-on-year basis, this stock has, started performing and negated. Overall, I believe, it's respecting its upward sloping channel. And on the weekly basis as well, it has been respecting from the last 30 weeks. Supports are gradually shifting higher. And this is poised for a more upside move over here. So recommending a buy here with 1,050 targets and a stop of 990.
Okay, thanks so much for that, Shivangi. We'll let you go on that note. Thanks for taking out time and speaking with us. Quick break. On the other side, we get you top BTST ideas and more. Stay tuned.